Japan is a land of contradictions, a place where ancient temples stand beside futuristic skyscrapers and where deep-rooted tradition meets cutting-edge technology. But the biggest paradox of all might be its economy. How can the world's third-largest economy, a global powerhouse, live with negative interest rates for years, seemingly defying the rules of modern finance? Welcome to the Economy Unpacked daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. Today, we're unpacking the enigma of Japan's economic model. It's a story of dizzying heights, a catastrophic crash, and a radical experiment that has the rest of the world watching. Is Japan a cautionary tale of stagnation or a blueprint for a more stable, sustainable future? Let's find out. To understand Japan today, we have to rewind the clock. After the devastation of World War II, Japan embarked on what can only be described as an economic miracle. From the 1950s through the 1980s, the nation transformed itself from ashes into an industrial titan. Fueled by a relentless focus on exports, technological innovation, and manufacturing prowess, companies like Toyota, Sony, and Panasonic became household names across the globe. This was made in Japan, a label that symbolized quality, efficiency, and an unstoppable economic force. The world watched in awe as Japan's economy grew at a blistering pace, challenging the dominance of Western industrial powers. But this incredible boom sowed the seeds of its own downfall. By the 1980s, confidence had morphed into speculative mania. The stock market and real estate prices soared to unbelievable heights, creating a massive asset bubble. At its peak, the land under the Imperial Palace in Tokyo was said to be worth more than all the real estate in California. People believed the party would never end, but it did. In 1991, the bubble burst spectacularly. The stock market crashed, property values plummeted, and trillions of dollars in wealth evaporated almost overnight. This wasn't just a recession. It was the beginning of an era of prolonged economic stagnation that would come to be known as the lost decades. The once unstoppable economic engine had slowed to a crawl, setting the stage for the unorthodox policies that define Japan today. Faced with a persistent enemy deflation, a toxic cycle of falling prices and wages that cripples an economy, the Bank of Japan BOJ was forced to take drastic measures when cutting interest rates to zero wasn't enough to restart the engine. They did the unthinkable. They pushed them into negative territory. The goal was simple, yet radical. By charging commercial banks to hold their excess cash, the BOJ hoped to force them to lend more money to businesses and consumers. More lending would mean more spending and investment, which would hopefully stimulate demand and push prices back up, finally breaking the deflationary curse. The effects of this long-term experiment have been profound and multifaceted. For Japan's banks, negative rates have been a nightmare, squeezing their profit margins to razor-thin levels and making it difficult to operate. For ordinary savers, the picture is just as bleak. The concept of earning interest on your savings account has become a distant memory. In some cases, people have even faced the prospect of paying to keep their money in a bank. This has pushed Japanese investors to look for better returns elsewhere, sending huge flows of capital into foreign markets, from U.S. government bonds to global stocks. For anyone in the West, it's a startling thought experiment. What if the Federal Reserve or the European Central Bank had to keep rates below zero, not just for a few months, but for the better part of a decade? Japan is living that reality. This unique monetary policy is just one piece of Japan's distinct economic model, a system that often prioritizes stability over the high-octane growth pursued in the West. The combination of perpetually low inflation and rock-bottom interest rates has created an environment of predictability, but it comes at the cost of dynamism. You don't see the explosive booms, but you also avoid the painful busts. Despite this low-growth environment, Japan remains a formidable global competitor. Its strength in high-value exports, from sophisticated automobiles and precision electronics to advanced robotics, ensures its place at the top table of the global economy. More importantly, Japan challenges the very definition of economic success. Instead of being singularly focused on GDP growth, the country places a heavy emphasis on quality of life. This is visible in its world-class infrastructure, high-quality public services, universal healthcare system, and low crime rates. The narrative here is a powerful one. Perhaps a successful society isn't just about how fast your economy grows, but about the social balance, safety, and well-being it provides for its citizens. Japan seems to have made a trade-off, choosing a quieter, more stable path over the volatility of relentless expansion. However, this unique model faces a monumental challenge, one that looms larger with each passing year. Demographics. Japan is one of the fastest aging nations on Earth. A low birth rate and long life expectancy have created a society where there are fewer young workers to support a growing number of retirees. This demographic squeeze puts immense pressure on the economy, from rising healthcare and pension costs to a shrinking labor force that could hamper productivity. Compounding this issue are Japan's cautious immigration policies. For centuries, the country has prized its cultural and social homogeneity, making it hesitant to open its doors to large-scale immigration, which could otherwise fill labor shortages. As a result, Japan has turned inward for solutions, becoming a world leader in automation and robotics to compensate for the lack of human workers. For many aging Western nations in Europe and North America, Japan's situation is not a distant curiosity. It's a preview of their own future. They are watching closely to see how Japan navigates the profound economic and social strains of an aging population. Because of its unique circumstances, what happens in Japan doesn't stay in Japan. Its economic policies have significant global implications. Central bankers at the Federal Reserve and the European Central Bank study the BOJ's every move. Viewing Japan as a real-time laboratory for unconventional monetary policy and the long-term effects of fighting deflation. The challenges Japan faces with its aging society serve as a crucial case study for other developed nations that are on a similar demographic trajectory. Furthermore, Japan's massive government debt, the highest in the developed world, and the BOJ's control over the bond market create ripples that are felt across global finance. Japanese investors, in their search for yield, are major players in international bond markets. Their decisions can influence interest rates and investment returns far beyond Japan's borders. This is the crucial link. Even if you live in the United States, the United Kingdom, or anywhere else, the economic choices made in Tokyo can indirectly affect your pension fund, your retirement savings, and the returns on your investments. Japan's economy is deeply intertwined with the global financial system. Naturally, Japan's approach has sparked intense debate. Critics argue that the country is stuck in a self-inflicted low-growth trap. They contend that Japan's reluctance to undertake bold structural reforms, such as deregulating its rigid labor market, empowering women in the workforce, or embracing immigration, has condemned it to decades of stagnation. From this perspective, Japan is a warning sign of what happens when a nation becomes too risk-averse and fails to adapt to a changing world. On the other hand, supporters paint a very different picture. They argue that what critics call stagnation, they call stability. In a world rocked by financial crises, political polarization, and social unrest, Japan stands out as an oasis of safety, social cohesion, and resilience. They point to its low unemployment, minimal inequality, and high standard of living as evidence that the Japanese model, while unconventional, is arguably superior to the volatile boom-bust cycles that characterize many Western economies. By providing this balanced view, we can appreciate the complex trade-offs Japan has made, allowing us to form our own informed opinions. So, what lessons can the rest of the world draw from Japan's grand economic experiment? The first is a lesson in balance. Japan's story is a powerful reminder of the dangers of speculative bubbles and the importance of fostering sustainable, stable growth, rather than chasing short-term gains at all costs. It highlights the need to find a healthy equilibrium between innovation and stability. However, it also serves as a cautionary tale. The prolonged use of extreme policies like negative interest rates can have unintended consequences. It can distort financial markets, penalize savers, and leave central banks with very little ammunition to fight the next crisis. The biggest takeaway, though, may be a philosophical one. Japan forces us to ask a fundamental question about our own priorities. It challenges the dogma that GDP growth is the ultimate measure of a nation's success, suggesting that social well-being, stability, and quality of life matter just as much, if not more. This prompts a crucial reflection for all of us. Should we prioritize growth at all costs, or should we be willing to sacrifice some of it for the kind of stability that Japan has achieved? In conclusion, Japan remains a profound economic paradox. It is an economy that is simultaneously seen as stagnant, yet remarkably stable, a warning and a potential blueprint all at once. Its journey through a devastating bust, the lost decades, and a world-first experiment with negative rates offers invaluable lessons for every other major economy. The ultimate question is one that has yet to be answered. Is Japan a model to be avoided, a glimpse into a future of slow-growth stability that awaits us all, or a unique path that only it can walk? What are your thoughts on Japan's economic model? Is stability more important than growth? Let us know in the comments below. And if you want more deep dives into the global economy, be sure to subscribe to our channel.